Hello everyone, my name is Adam Livingston and I am your number one source for Bitcoin and Bitcoin Treasury Company analysis. I am very sorry that it has been a few days since I've seen you all last. Something tragic happened in my personal life. Over last weekend, the city I live in had the most rainfall we've had in over a century, and my entire basement flooded, knocking out my furnace, AC, washer, dryer, every appliance. And then we got a heat wave of 100 degrees Fahrenheit with no AC, so I had to retreat and focus on writing in an environment where I wouldn't die. That said, I am back and ready to attack, so thank you for bearing with me. There is a lot to talk about, so let's get right into it. Just a quick reminder, this is not financial advice, this is financial entertainment. Look around you, the fiat matrix bleeds out in real time, yield curves are inverted like a yoga instructor possessed by Pazuzu, and every central banker is printing money the way a drunk mall Santa prints trauma. Into that charred wasteland strides Anthony Pompliano, with a $1 billion Bitcoin bazooka and a podcast audience the size of Rome, ready to grab every stray dollar that still thinks CPI is only 3%. If strategy is the Federal Reserve of Bitcoin, Procap is the Goldman Sachs of laser eyes. And tonight we are underwriting the apocalypse at 4 to 6x NAV while the S&P clutches its pearls. I will walk you through reflexivity loops, valuation scenarios that make Monte Carlo simulations blush, and catalysts that would give a caffeine overdose to a liquidity junkie. By the end, you will either press buy so hard your keyboard files for workers' comp, or you will crawl back to your 60-40 portfolio muttering about volatility while your grandchildren Venmo each other in sats. Strap in, silence your compliance officer, and prepare to witness the birth of a Bitcoin native Death Star disguised as an SPAC. First, the plumbing. Procap BTC is reverse merging into Columbus Circle Capital Corp, ticker CCCM. Think of it as grafting a Tesla battery onto a 1998 Civic. Suddenly, the old SPAC shell can do a 0 to 1 billion in 3 press releases. Show me the ammo. 516.5 million in equity, already wired. 235 million of 0% convertible notes. Because real quants don't pay interest, we extract it, add the SPAC trust plus pipe, and you're staring at $751 million of dry powder before we even break for lunch, folks. But wait, there's a levered dessert. Post-close authority for up to $1 billion in Bitcoin buys. Translation, we can hover up about 9,700 Bitcoins on day one, front-running ETFs that still need SEC love letters. Liquidity Avengers assemble. You have Citadel, Susquehanna, and Jane Street. Literally the market-making Justice League. Their spreads are so tight they need a safe word. Why does this matter? In TradFi, capital is oxygen. In Bitcoin land, it's rocket fuel. We just backed a rocket truck up to the launch pad and left the engine running. So yes, ladies and gentlemen, they have packed the war chest. Let's count how many Satoshis we can strip mine with it. The slide you're staring at is basically a speed run of treasury arithmetic. Start with the headline figure, $1 billion sitting there like a coiled python, waiting to pounce on Bitcoin at roughly 103,000 per coin, which means we walk away with about 9,700 BTC the instant the deal consummates. But markets never cooperate, so we stress test the extremes. Picture Pomp tweeting something so bullish it nudges price 20% higher before closing. Suddenly that same billion buys around 8,100 coins. Still a respectable stack, but the python gets a bit slimmer. Flip the script and imagine a flash crash that slices 20% off the spot price. Congratulations, the python now swallows roughly 12,100 coins instead. Either direction, the order of magnitude is institution level obscene. The key takeaway you hammer home here is scale. Even the low end scenario gives Procap a top 12 to 15 corporate hoard on day one, instantly leapfrogging half the miners who spent a decade earning their stash block by block. This is the capital markets equivalent of buying an NBA championship by signing every all-star in free agency overnight. So fix those numbers in everyone's head, 9.7, 8.1, 12.1, and remind them whichever column reality chooses, Procap still detonates into the leaderboard. Ladies and gentlemen, these are not projections, these are adoption speed limits, and Pomp just cut the brake lines. Picture an IR department with a built-in loudspeaker that reaches more people than the population of Philadelphia every time it inhales. That's Anthony Pompliano's X account 1.7 million followers who treat each tweet like the Federal Register of Bitcoin proclamations. Now layer on top a daily podcast that parks itself inside Apple's investing leaderboard so often the chart looks like a reserved parking spot. When Pomp records an episode, he can, at will, redirect hundreds of thousands of earbuds straight into the Procap ticker. No intermediary, no advertising budget, just a microphone and an algorithm that loves engagement. This is not traditional brand awareness, this is a real-time order flow cannon aimed at every retail brokerage app in North America. Each bullish monologue is effectively a call option on virality. Each guest appearance from a macro rock star is a liquidity event masquerading as a fireside chat. The street will try to model this as a marketing expense. Good luck, because the numerator is free and the denominator is the entire internet. In a world where ETFs spend 8 figures on banner ads to capture mind share, Procap gets the same whenever Pomp hits publish on his morning rant. So keep that reality lodged in your frontal cortex as we roll forward. Procap doesn't just buy Bitcoin, it buys the distribution network that tells the story of buying Bitcoin. That reflexive feedback loop, media to inflow to higher premium to bigger stack to juicier headline to more media, is how a balance sheet morphs into a meme and a meme morphs into market cap. Now, armed with that bullhorn, let's see how Reflexivity turns numbers into nitro. Everything you've seen so far is raw fuel. This slide is the combustion chamber. Here's the choreography. The moment Procap lists, price almost certainly gaps above its net asset value because the market loves paying a premium for fresh minted scarcity. I mean, have you been paying attention recently to some of these smaller players? My God, you're getting triple digit returns every day. The second that premium appears, the treasury team opens the ATM spigot and sells a sliver of equity directly into that froth. Those new dollars don't sit around, they sprint straight into the spot market and buy more Bitcoin. Instantly, the NAV ratchets higher, which justifies the premium, which grants us even more headroom to sell the next sliver of stock, which buys the next batch of coins, which lifts the NAV again, and so on until CNBC runs a 5-minute segment titled, "Is This Legal?" You've seen the template already, I know. Strategy, Metaplanet, whatever. Here's the deal, folks. I'm getting new viewers all the time. This is such a new phenomenon. I still gotta educate the masses. Calm down. Sailor's been playing this game for over 4 years, and Strategy still trades at nearly twice its net asset value, despite its more than 500,000 coin stack. Here we're starting with fewer than 10,000 coins and a media cannon bolted onto the hood. The torque on our flywheel will be violent. Reflexivity isn't a gimmick, it's financial physics. Premium begets capital, capital begets Bitcoin, Bitcoin begets higher NAV begets more premium. Rinse, repeat, compound market cap at a tempo that makes traditional balance sheet growth look Jurassic. So when someone asks what's the exit strategy, the honest answer is there isn't one. There's only escape velocity. And once we hit that speed, gravity is a problem for other tickers. Now let's put some explicit numbers onto that madness, onto valuation. Here's where Reflexivity math stops flirting and starts handing out hard numbers, focused first on the base case. Bitcoin drifts to a modest 150,000 by year-end 2026. Procap keeps its original stash of roughly 9,700 coins, and the spreadsheet spits out a net asset value of about $1.46 billion. History says the market is happy to pay roughly 1.8 times that book value, so the implied market cap lands at around 2.6 billion. Already a tidy double on the initial equity raise, assuming they traded a similar MNAV to Strategy. Now twist the dial to the bull setting. Coin snaps to a 250,000 by year-end 2026. The NAV climbs to 2.43 billion, and the crowd, amped by the Pomp media flywheel, decides 4 times NAV is perfectly reasonable. Suddenly, the capitalization leaps to just under $10 billion. Finally, let the imagination off the leash. A mega bull cycle drives Bitcoin to 500,000, NAV explodes to 4.85 billion, and speculative fervor attaches a 6 times multiple. That arithmetic prints a jaw-dropping $29+ billion market cap. Remember, this is not even judging how fast they can accumulate either. This is to demonstrate the multiple of just the original acquisition under a bullish scenario in just under 2 years. At that scale, Procap would vault past half the S&P 500 in under 24 months, demonstrating what happens when capital markets, meme dynamics, and a fixed supply assets all resonate in the same frequency. Assuming the billion-dollar capital raises this company is going to accomplish to buy Bitcoin, this is easily one of the biggest companies in the world in a very short amount of time. Keep those figures figures in mind because the next slides unpack the catalyst that could turn the mega bull column from fantasy into quarterly guidance. Here's where the valuation table starts to look quaint because Procap is going to pioneer Bitcoin-backed financial products. Sometime in the first quarter of 2026, Procap is expected to unveil its inaugural Bitcoin-backed lending product. Think of it as Goldman's securities-based lending desk, except the collateral is laser-eyed and wears a scarcity cape. The moment that 8% yield prints on an earnings slide, finance Twitter will treat it like the second coming of risk-adjusted alpha, and the associated spread income drops directly into EPS that traditional banks can only fantasize about during shareholder letter season. Not long after, the passive flows machine wakes up. Once the free float clears 20% and market cap pops above the 8 billion line, both targets are mathematically inevitable in the bull scenario. Russell 1000 algorithms slam the buy button, followed by NASDAQ 100 quants who track liquidity like bloodhounds. Every index inclusion is a forced bid holiday. Each rebalance ratchets demand higher, decoupled from whether Bitcoin itself happens to be taking a breather. Layer in the policy backdrop and the narrative writes itself. The Trump-era strategic reserve chatter keeps table news talking heads glowing, and every time an official so much hints at national competitiveness, a fresh coalition of FOMO-laden asset managers convenes emergency investment committees. The halving memes provide a rhythmic marketing calendar, predictable 4-year drum beats that mainstream media dutifully amplifies for free, and when Bitcoin inevitably wobbles 10% in a single day, Pomp'S podcast goes live with a title like, "I bought the dip so you don't have to," pushing a fresh wave of retail inflows through commission-free brokerage pipes. Combine earnings juice, index vacuum cleaner, policy halo, and a content flywheel that refuses to decelerate, and the so-called mega bull column no longer looks like hopium, it reads like a rough draft of next year's 10K. Before everyone sprints off to max margin, it helps to remember that Bitcoin conducts regular stress tests at live ammunition velocity. Price can drop 50% faster than a Kardashian can drop a skincare line. So $1 billion stack can become a $500 million headline overnight, and Jim Cramer's producers spin the red ticker like a carnival wheel. Regulators might then smell blood and decide that corporations owning magic internet money deserve the same 4-letter treatments previously reserved for Enron. Picture subpoenas printed on hemp paper to keep the ESG crowd happy. Custody remains another delight. You know, people have trust issues with even multi-sig cold storage. Critics also love chanting that Bitcoin treasuries look suspiciously like a bubble, and bubbles, history reminds everyone, have a nasty habit of popping where margin clerks outnumber true believers. That said, I personally think that's nonsense. I think you guys know that about me. Finally, systemic risk does lurk in the corner. If several balance sheet maxis attempt an exit in the same quarter, liquidity thins quicker than an airline coffee at 30,000 feet, turning a routine risk-off move into a synchronized cannonball off the high dive. Anyone who can't stomach that midnight volatility roller coaster should probably stick to municipal bonds and kombucha futures, because Procap exists precisely at the point where volatility and opportunity swap phone numbers and start a fire. Not financial advice, remember. Consult your boomer financial advisor and your dog first. That said, if the valuation math, catalyst gauntlets, and reflexivity engine don't trigger involuntary click-to-buy impulses, consider the time horizon. Within months, the first $1 billion transforms into a Bitcoin fortress, and early shareholders occupy the ground floor of a premium spiral that algorithms will chase long after humans have logged off. Front-running that dynamic is less about conviction than it is about arithmetic. The numbers, not the narrative, handle most of the evangelism. For traders who thrive on volatility, the premium itself becomes a playground. Spikes and MNAV offer swing setups that make blue-chip options chains look sedated. For allocators allergic to day trading dopamine, simply parking capital ahead of index reconstitution season captures passive inflows that arrive with the punctuality of tax day. Meanwhile, every Pomp podcast episode doubles as a free investor relations roadshow, meaning position sizing can scale with each viral clip without a corresponding uptick in marketing spend, because the only advertising budget required is coffee and a microphone. Nakamoto and Procap have this advantage on lock, in my humble opinion. Pause for a moment to acknowledge compliance. Hello down there, because no amount of enthusiasm negates the fact that Bitcoin can atom bomb 50% in a weekend. Regulations can pivot faster than a politician in an election year, and cold storage still relies on the fallible carbon units known known as humans. In other words, consult a room temp IQ financial advisor and your therapist before allocation. That said, history rarely rewards timidity when paradigm shifts announce themselves via billion-dollar artillery barrages. So choose caution if you must, but understand the opportunity cost may echo until the next monetary epoch. In summary, either press the buy button hard enough to void the keyboard warranty or return to the comfort of index funds and artisanal kombucha. The market doesn't care, Bitcoin certainly doesn't care, and Procap's reflexive flywheel will spin regardless. Cue the laser-eyed bull gif, and let the order books sort the believers from the browsers. We're going to be staying close to Procap as the details come out. This is going to be massively exciting. Congratulations, Pomp. Cannot wait to see what you do with this. My name is Adam Livingston, and I am the Bitcoin Wizard. Please leave a comment with what you'd like me to cover next. Class dismissed.